Something unusual is happening at the Federal Reserve. The US Justice Department has officially stepped in and is demanding answers from the Fed. And this is happening right before the next interest rate decision. So the real question is this about accountability or is this about pressure to force interest rate cuts? Because if the Fed is being pressured, markets will react and crypto will feel it. Stay with me. Hi, my name is Lamia, and in this video today, we are going to quickly break down what's happening between the Justice Department and the Federal Reserve. Why Jerome Powell suddenly released a video, what this means for interest rates, and why all of this matters for assets like crypto, gold, and markets overall. If you want clear macro explanation without noise or panic, make sure you subscribe. We're growing this channel together. Let's start. Over the weekend, Jerome Powell released a video. That alone is unusual. In it, he says the Justice Department is demanding documents related to his testimony before the Senate last year.
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June.
That testimony had to do with a large renovation project for the Federal Reserve building. Now, on the surface, this sounds boring. But the timing is what makes this serious, because this is happening right before the Fed decision, whether to cut rates, pause, or wait. The Federal Reserve is supposed to be independent. It's not meant to take orders from politicians, and it's not meant to be pressured right before rate decisions. When the Justice Department steps in, markets don't look at the detail first. They look at one thing: uncertainty, and market hates uncertainty. Right now, most traders expect the Fed to pause at the next meeting. Inflation has cooled compared to the peak. If the Fed cuts rates too fast, it risks reigniting inflation. If it waits too long, it risks slowing the economy. That's the balancing act. Now, add political pressure on the top of that. That's when volatility shows up. Look at what's already happening. Gold hit all-time high. Silver has been moving aggressively. That usually tells us one thing: people are preparing for instability, not calm. This doesn't mean panic. It means positioning. I'm not here to hype coins, but structurally, this is what matters. When rates are expected to fall, risk assets usually benefit. When trust in institutions weakens, people look for alternatives. Crypto sits right in the middle of that. Not because it's perfect, but because it exists outside the system. That's why moments like this matters. This isn't about one building, and it's not about one video. It's about something bigger. Pressure on the monetary system at a time when debt is high, inflation has already hurt people, and trust is fragile. That's the context you should be watching. Now, I want to hear from you. Do you think this is genius accountability, or do you think this is pressure before rate cuts? Tell me in the comments below. And if you want to stay ahead of these shifts without emotional noise, subscribe to the channel. Also, follow us on X and join our Telegram. It's a growing community and the links are down below. Thanks for watching, and I'll see you in the next one.